against Bridgewater Associates, which is a big financial analyst group. They also had Vanguard and TD Ameritrade and Charles Schwab. All back test the asset allocation on this, and with the indexing through low cost, low fee, and the specific asset allocation that they had, they found out, listen to this, they found out that over 75 years, actually it was the last 75 years, the returns on the asset allocation for the All Seasons portfolio were astonishing. 85% of the time, it won, meaning it gave back returns. Now some of these weren't, extremely large returns, but normally it was matching the S&P 500 index, so you're getting about 8 or 9% return annually, 85% of the time, guys. All right. Now the other, and that's over the last 75 years. The other time that it was losing, because you are going to lose. I already told you this in several videos. When you invest, prepare to lose money, because there's no way to win all the time. You can't defeat the law of gravity. What goes up must come down. You can't defeat that. So you're going to lose some money. But when it did lose, it only lost 15% of the time. All right. Now, I don't know about you, but looking at these, if somebody told me that I could go to the casino and that I was going to win 85% of the time, all right, and I'd only lose maybe 15% of the time, how often do you think I'd play? Like, I'd play all the time. And that's exactly, those are the real numbers, guys. These are been back tested by Vanguard, Charles Schwab, TD Ameritrade, and it was that asset allocation I was talking about, and it was all done off of low cost, low fee indexing. All right, so these numbers I'm showing you are actually legitimate. Okay, and if you take that into consideration, that's what you want when it comes to the asymmetrical risk reward that I was talking about in previous videos. You want that. So basically, if you're not doing it right now, that would be one of the main things you want to start doing in your security bucket. Okay, and the cool thing is you can put this thing on autopilot. You can do it through your 401k. Personally, I don't really trust the managers out there that are managing the 401k funds. And the reason why I don't trust them is because, well, they're employees. Okay, they're making a paycheck. They're getting paid to manage your funds for you. But do you really think they care about your funds as much as you care about them? Because they don't. I mean, so it only makes sense for me to, I'll still do the 401k with the company, but it's not my main focus. It's not my main focus. The money I never see, it goes into it. Right now I don't have one with the company because I'm going through school and I'm trying to get a new career started. So meanwhile, while I'm going to school, I'm going to start this All Seasons portfolio and get it on autopilot and contribute to it monthly. And in a later video, I'll also break down how you can do that so you can kind of manage your finances. What you'd end up doing is basically decide on a specific amount of money each month that you're going to throw in to all your investments, and you break it down to like 70% in your security bucket, 30% to growth, that kind of thing. So that's what you want to do when you get this thing on autopilot. But again, VOO is just one of them. I'll break down in another video the asset allocation that Ray Dalio talks about. Okay, and I'll go over the specific percentages of your money that you want to put into like long-term U.S. bonds. Excuse me, I'm looking at the notes. Stocks, intermediate U.S. bonds, gold and commodities. Okay? So stick around. I hope you guys, are learning a lot right now through these video series, and stay tuned because I have some more coming up here soon. I'll probably have a couple more videos out here next week, alright? Till then, guys, take care and Merry Christmas.